Hello everyone, what's up? So good morning. Um, so welcome to the webinar today. It's called Getting to Grips with Cash Flow. And what we're going to go through today is just a number of different things around the cash flow aspects within a small business. So first of all, what we're going to do is just drop a message in the chat if you can just see and hear me at the moment. Just double check that everything's all working and up and running. I'm going to wait another minute or two just for a few more people to turn up while it's obviously Zoom's downloading and everyone's joining and stuff like that. And we'll get ready to go in a couple of minutes. Okay, so let's get going. So what I'm going to do is I'm going to share my screen and we're going to go through a few of the slides that we've got prepared. So there we go. Just move this down. And let's present. So my name is Ben Nacca from Cone Accounting. We're a digital cloud accounting firm specializing in small businesses, tax and business growth. And today this webinar is getting to grips with cash flow. So it's something that it's probably one of the most requested kind of features and queries that we get asked about all the time. So we thought we'd go ahead and just do a webinar to cover it. So you're in the right place if you break out in a sweat when you start to think about cash flow, if it's a bit of an issue, a bit of a nightmare, the whole keeping you up at night. If you are opening your spreadsheet and you immediately close it, telling yourself that you'll get around to it another day. But also if you aren't sure how to keep on top of your cash flow, how to actually manage it, how to measure it, how to kind of get control of it. And lastly, if you need help creating a budget, or at least a starting point of where to go, a budget can sometimes be a bit daunting of where do you actually start, what do you break it down with? And so with everything that's kind of like a project of sorts, you break it down into steps, and we're going to go through and touch on a few of those points and steps that you can put together yourself at a later date. So what you're going to learn today, so you're going to learn what cash flow really is, the big terms you need to know for today, what you need to know to take control of your cash flow, how to use a budget spreadsheet and or software, and just facing the problem head on and what to do with that. If you stay until the end, we'll do a bonus Q&A about the cash flow aspects of this webinar. That can either be of a personal experience within your own business, or just something that you just want to get clarity on that maybe I didn't explain clearly enough on this webinar. So by all means, put your Q&A. There'll be a little there's a little Q&A box in the Zoom webinar system, so you can just click on that. You can type in your question, and it will come up. I'll answer your questions at the end. Like I said, but feel free to drop them in as you go, and we can always double back at the end and go over any last little bits and sections that you want to cover. So the goal today is to get unintimidated about cash flow and to wrap our heads around cash flow itself, so that you'll be able to make the key decisions in your business that will help propel you forward. We'll also have some free stuff, call to actions, as it were. There's no sales or spam. Not a fan of those webinars where they're just trying to pitch you at the end to get the rest of the content that you actually came here to see. So everything is going to be covered in this webinar, with a few kind of extra optional things that you can do at the end that can help you further as well. So terms you need to know for today. So what I'm going to do is I'm going to drop in, if I just pause the share for a sec, I'm going to drop in the chat a downloadable version of this. Let me just, I'll do that at the end. So it'll be a downloadable version that you can have, which will go through basically everything that you, of all the terms that we're going to go through and the explanation of these. But essentially, we're going to be talking about revenue, your cost of sales, your overheads, profit, gross profit, your cash, your ROI, your return on investment, that is, your break even, cash basis, and accruals basis. So the help sheet will be attached. Essentially, these are, if I just go down to this one. So revenue, first of all, that is your sales, your income generated by the sales of your goods or services. Your cost of sales, so that's your direct costs involved with the sales of your business. So this, as an example, that would be the wood or timber used for the wooden table company, for instance. So, that's the product that you're buying to turn into your product or service that you're then selling. Is usually variable, and they will fluctuate depending on your sales level. Your overheads, now they are all your other costs, really. They're usually fixed. They're not really directly affected by your revenue. And so that can be things like rent, phone bills, accountancy fees, bank fees, all that kind of stuff. Your profit and your gross profit. So your net profit is the first one, your overall profit of the business. That's basically after everything. So your revenue less your cost of sales less your overheads. Your gross profit is your revenue less your cost of sales. So that's basically how much money you're making before all your other expenses and overheads come into play. That's a good indicator of whether you're actually making money on the product you're selling, and if perhaps you're buying too high to then resell, perhaps. Now, cash itself, we know what this is in the literal sense, but in the accounting sense, it's a little bit more ambiguous. So cash is the flow of money in or out of the business. It can be banknotes and change. It can be card transactions, deposits. It can be direct debits, pay to your suppliers, bank transfers, or even put on credit cards. It's fundamentally the flow in and out of the business, and it's your lifeblood of the business. Without the cash, the company, the business is just not going to run. So you need to get cash from somewhere, whether that's from the profit that you're making on your sales, or whether that's to begin with from your own funding, or maybe investments and stuff like that from outside factors. Cash is essentially the fuel, and your business is the vehicle. So ROI is your return on investment. So a little bit like what we're saying about the cost of sales here, it's how much you're getting back after you've paid for something, kind of your margin as well, it can be called as. But essentially, if a company spends £100 advertising and they receive 5 customers directly who each spent £50 in store, then the ROI is £150. That's 250 less the £100 spend is 150 ROI. So it's kind of like a mini profit that can cover, like whether it's your marketing spend, whether it's your goods that you're buying to then sell. So that's kind of what that's covering. Your break even. So your break even is the point where your business has made enough sales and profit to cover the costs for that particular period. Now it could be a week, month, a year. That could be over 5 years. The break even that you're looking at can be a kind of the period that's up to you, really. Obviously, if you're looking at the total break-even period of the entire company, then you'd be looking from the day it started to the day that you broke even and basically made all your money back. that's before you actually truly make any profit on top. So you could have had a huge loss in the first year and a huge profit in the second year. And although you've got that profit, it's kind of just offset the loss from previously. And so you've now broken even. And all future years, if you make profit, that's all going to be extra above and beyond. And so the break even is just that point where you've kind of made your money back. And everything from that point on is your money that you're going to be making on top of it. And then the cash and accruals basis. So these are two accounting system methods, as it were. The cash basis is based on when you're actually paying and receiving the money for your goods, services, whatever it might be. So it's the actual transaction that's happening. Whereas the accruals basis is based on the tax date. So you might get an invoice that's dated the 1st of June, and it will be recorded as of the 1st of June in your accounts and on your VAT returns and all that kind of stuff. But you might not get paid that, or if it's a supplier, you might not pay that for 30 days. And so it falls into the 1st of July. And so it doesn't matter when you actually pay or get paid that invoice. The tax date, the accruals basis of that invoice is the 1st of June. Cash basis, if you paid it on the 1st of July, it would be recorded as of the 1st of July for things like VAT returns, and it would go on your cash flow forecast on the 1st of July. What you'll find is VAT, depending on your revenue levels, you can choose to be on the cash basis or the accruals basis. There's different thresholds, so you've got to basically your turnover's dependent on whether you can be on them. But I think it's 1.3 million approximately is the cash basis limit, where you've got to come off it and go back to accruals. And so everything that you're doing on the cash basis there can be recorded in your VAT returns, and you only pay VAT over to HMRC when you yourself have been paid. Likewise, you only claim it back when you yourself have actually paid the VAT over to your supplier. So that's kind of how that works. But you'll notice that in a lot of company accounts and year-end accounts, personal tax returns, it's all done on the accruals basis. You can move some things around. So obviously, if you haven't received some payments for invoices, or you're just never going to receive them, you can mark them off as bad debts or have them adjusted. And that's something to talk to your accountant about. If there's a particular invoice you think you're never going to get paid for, we can actually move it out so that it looks like it doesn't affect the current accounts, and you're not then suffering the tax on that. Or if you've already suffered the tax on it, it can be removed and that can be counteracted. So that's kind of what the cash and accruals basis is. Usually your tax is worked out on the accruals basis for corporation and self-assessment tax, but the VAT you can operate on the cash basis, and use the cash basis a lot more for cash flow forecasts and charts and budgets and things like that. So like I said, there'll be a little downloadable with those all explained as well. So you can have a look at that, and all the descriptions are there underneath as well. So what you need to know to take control of your cash flow. So it's the number one problem that we basically get asked all the time from clients, even way back when I was starting my career at other firms and things like that. It's probably the number one query that comes up every time is I'm struggling with cash flow. How can I improve it? Or I don't know if I can afford the business in 6 months' time, or when can I finally pay myself? When can I get those dividends, etc. And so that kind of query crops up a lot, and it's all about how to just get a handle on it, how to improve it. And so the idea of what we're going to go through in this webinar is to kind of go through those key points and some tips and things like that you can do to improve it. So it can be just a cash flow squeeze on big decisions. So your business might be running perfectly fine. You might have a lot of cash flow coming in. You're generally healthy. You're paying all your bills on time. Your customers are paying you well as well. But you might be at that point where you need to do a big jump. So you either need to get a new premises, or take out a warehouse, or hire some new staff members, maybe 2 or 3 of them at once if you're growing rapidly. And so that can put a temporary strain on your cash flow, because you might be running day-to-day fine, but to expand, to get more, you've reached that point where you need to kind of take that next level up. And that's going to require investment, whether that's deposits and legal fees and contracts and all that kind of stuff, which is going to cost you money. And so it's something that you can then, is going to then put a strain on it. So you want to make sure that you're looking at, long term, does it fit into your cash flow that you've got existing already? Is it going to be sustainable? Is it going to lead you to be able to make more sales in the future? That's ultimately the goal, is that you can then hire staff or take out new premises, and that will allow you to expand. So you have the capacity to take on more sales to increase that cash flow and kind of plug the gap. But a lot of that stuff, obviously, you've got to then do that commitment first to open yourself up to have that capacity in the first place. So what we see is that can be the big decisions there. And these ones are a little bit more easy to deal with because you can run scenarios. Basically, you can have your budget sheet, which we're going to go through a little bit later in this webinar. But you've got your budget sheet there, and you can kind of then play around with the figures and say, okay, well, this is what I'm currently doing and what I currently need to stick to. But what if my wages were £2,000 a month more? What impact would that have over the next 6 months? And so you can kind of then play around with the budget and see what works, what your affordability is, and you can kind of then work back from that basis and then make sure that it's long term, it's going to be sustainable, and that you can then affect your sales targets directly. And obviously, I think the main thing to say here with budgets is that a lot of it is speculative. Something could happen tomorrow that changes the entire budget entirely, or changes the direction that you want to go in. And so you've always got to look at them objectively with, does it align with your goals? Is it key with what you're aiming and walking towards, I guess, in the sense of your business journey? And, considering those outside factors as well, is it a good time to hire? Is it a good time to buy or lease the new office, perhaps? Do you have the capital to do that? Is there potential return on investment on that in the future if you come to sell the business or sell the property? So there's a load of different things that you can look at there as well. But they tend to be a little bit more in the positive light. The big decisions, they tend to be a bit more, how we're going to move the business forward and where we're going to spend that money to get the most maximum value that we can, so we can generate more sales and increase that capacity, like we said before. So that's the big decision. Now, the smaller problems, the ongoing issues, the leaks, they're the ones that we get the most queries on. These are the things where it's the trickling effect of things just slipping through the bank account. The subscriptions that you're not utilizing fully, maybe the margins that haven't been calculated correctly on your product, even perhaps that you're just paying a little bit too much than you would like to be on the goods that you're buying, on your cost of sales. And so when you're then flipping to sell that, you're then struggling to get that kind of return that you would like. So so we're going to go through some things of how to improve that in terms of the sales aspect, and things of how to tackle your costs, how to tackle your pricing and the value proposition that you're providing to your clients and your customers, and some sort of pros and cons of those different methods of ways to look at those issues and leaks. Probably the main thing, though, is that you've got to recognize the issue. You've got to admit the problem, a little bit like an addiction, I guess, or something like that. You've got to stare at it face on and just say, right, we do have a cash flow issue. This is exactly what's happening. This is the cause, or these are the causes of this. And this works with the big decisions as well. It might be, I want to take on this extra staff member, or I want to take on this office, but I can't because this is the issue. This is the area that's holding us back. And so once you've defined that and you've recognized it, it's then much easier to then actually go, right, okay, how can we solve that? What options are available, and how can we move forward? And once you've done that, you can then start preparing your budget. So obviously I'm going to go through that in a second with you. But you can then prepare your budget, and you can go through roughly what you're going to be looking at in terms of what areas you need to improve on. So what we're going to do is I'm just going to open up this Google spreadsheet, and basically I'm just going to show you essentially the how to get the most out of budget spreadsheet, how to kind of utilize it quite simply. You can make them as pretty as you want, as functional with formulas and VLOOKUPs and if statements, all that kind of stuff if you want. But you can also quite nicely just create a basic template, as it were, where you can always add to it. It's a work in progress. It's going to be something you're going to be adding to constantly. And what we normally recommend is that you just start off with going with what you know to begin with. So you would go through your statement for the last month, perhaps, for June, perhaps, or for May, if you want the last full month. And you'd have a look and you'd go through, basically you're going to work from the bottom up. So you'd start off, first of all, with all your overheads, as it were. So under here, we might have accountancy fees, we might have bank fees, advertising, consulting, telephone, etc. And depending, I would probably recommend that you would be granular with this. So, you'd have like O2 instead of telephone, and you'd have like, Cone instead of accountancy fees, or whatever it might be. You'd be granular with the supplier name, because you might have multiple spends within these accounts. And you want to really see who the culprits are, who's making up that spend, what the value is, what's going towards it, what are you spending month on month. And that breakdown will then give you, basically, if we just put some figures in here, let's just say that was that, and that was £1,000 on advertising, £10 on bank fees, £300 a month on accountancy. So what we'd have here, these are your overheads, as it were. So these right here are, before you've bought any of your products, before you've made any sales, you've got £1,550 in this example of costs that are going out of your business. So these are what we generally call fixed costs. And they tend to, as I mentioned before, they tend to not really fluctuate too much at all in terms of sales level. You might need to upgrade things, or, as your business grows, but it's not a direct effect. The kind of fixed costs are kind of all your other overheads that, it doesn't matter how much money you bring in, your rent is going to be the same 9 times out of 10. Same with your rates, same with your bank fees, telephone, all that kind of stuff. Now, yeah, usage might push those up slightly, but it's going to be more on general business activity rather than a direct link to sales. So the next thing we're going to do is your cost of sales. And if you run out of rows, you can always just add some new rows in above. The reason why we're adding them in from the bottom up is because we're working from basically what your bottom figure is going to be, what your costs are, first of all, what your spend is, and then we can work back up to your sales. So again, on your cost of sales, we'd look at your variable costs. And so this might be materials and labor. And again, you'd split them out by the supplier. But again, we could say, right, there's £2,000 of materials and we've got £1,500 of labor. So we've got that. And again, like I said, there's free templates, there's paid templates out there, there's software that you can use as well. Or you can use a Google Sheet and just put a rough draft together like what I'm doing here. There's really different levels of types of budget sheets out there. But this is just kind of to illustrate the starting point, as it were. So what we'll have here is we'll have your sales, and you might have multiple sales streams. Like, say, you can say, let's do the retail and e-commerce, perhaps, just so we've got a nice little header as well. And we can say the retail sales, I'll say £5,000 normally, and let's say the e-commerce is only 1,000. So what we can then have is you can put these little things in here, net profit, which will be your sales less your costs, less your variable, less your overhead, sorry. And so that'd be £950 in net profit. And if we wanted to put the gross profit in here, we can do that as well. Okay. Gross profit here. There we go. And so, you know, we could say this was June 2019. And what you can then start to do is you can say, well, look, these are going to be pretty much the same for July 2019, August 2019, etc., etc. So these can start to move over. And obviously you would know your, I'll just move these over here. So you can create on a Google spreadsheet almost like a 12-month forecast. Down here, we'd also have things like bank loan repayment, perhaps, maybe HMRC, VAT, and perhaps we could have something. Let me just have a look. Yeah, I think that'll be fine for now. Maybe credit card repayment, something like that. Because remember, although we've broken this down like a profit and loss, it's not actually looking at, you know, that profit, like we said before, that isn't your cash. So what we've then also got is say a £300 loan repayment. We've got no VAT yet, but maybe we've got a £3,000 VAT liability coming up potentially in August, which we provide for, have a provision. Any repayment, we could say that's like £150 a month, something like that. So these are then nice and key in here as well. And these items, the reason why these wouldn't be on your profit and loss, they'd be on your bank statement, but they won't show up normally in your profit. And that's because they are payments from the balance sheet, essentially. So these are items, these are debts that are getting slowly repaid. So they're not a cost to the business in the sense of tax relief. The loans come in, you've got £500 or say £300 loan repayment each month. That doesn't go to the profit and loss. The interest might, but the actual capital repayment just knocks off from that liability on your balance sheet. The amount that you owe to the loan is slowly reduced as you make each payment. So if you're just looking at profit and loss, you're going to miss that. And that's why the profit isn't your cash, because the profit is looking at what you've sold versus what you've spent on an accounting side of things. It doesn't factor in those repayments and bits and bobs like that. So we can then say that your net cash flow will essentially be £500 up, because after you've made profit of £950, and again, this is all based on the bank statement. So these are things that you've actually paid, actually spent, and actually received. So these, again, this is why it's different from profit and loss, because like I said before, if you're on the accruals basis, you're going to have things in your profit and loss that you might not have paid yet, that you might have not been paid yet. And so that profit and loss might come up with like a £2,000 net profit instead of £950 net profit, because you might have, it might be different. You've spent more this month, perhaps, or you've caught up from some payments last month, perhaps. So that's why you want to look at this as a cash flow statement rather than a profit and loss. So you'd have your net cash flow of £500, and you can have a mini kind of trail here. So you can have like brought forward and carried forward, as it were. And let's say this was first month, so you had no cash brought forward. But you'd literally then have this, and so this would always be your carried forward, as it were, like that. And let me just bring this over like that. And you can start to see it will give you a flow of what your, if you made no sales in the July or August, for instance, then you would see that you start going into the negative cash flow, which is then encountered by, either you've got to put your own hand in your own pocket to get money into the business that way. You're going for investment or loans or credit perhaps. And so what this does is this allows you to kind of work back. So you can then, we've then got, let me just move this one over as well. So we can say, well, we're going to go, if we know that our materials are, let's make that, yeah, let's do that. So let's say that we predicted July was going to be a little bit worse in retail and commerce. Materials would go down maybe a little bit in terms of what you got to spend. So maybe you only had like 1,700 coming up, and you had labor of, say, still at the same labor costs though, still at the same staff working on a salary basis perhaps, and the sales would go up. And you can either put these in as predictions based on if you've got trends in your business, or you base them off from last year's plus a percentage, or you can put them in as the target you would like to hit. Obviously, the thing with that is that when you're setting a sales target, you've got to make sure it's achievable, it's realistic, and that you're putting in the work required so that you can reach that target, whether that's extra marketing or whether that's just your products or the content you're providing. So what we can then see here is if we've got, that will go up. So let's say that materials went up to that, maybe a little bit of overtime for the staff. And so you can see here that it slowly starts to work its way through. Obviously, we've got the VAT to pay this quarter in the August, so we can see that it's got a bigger impact on cash flow. And although that's once a quarter, that's still a bit of an impact when we've had nothing brought forward. If this was, say, £2,000 brought forward from the previous month before that in May, this would compound like this. You can see you've got this kind of then flow of what's coming in and what's going out of the business. So that's a really simple way of just visualizing what you've got, and you can just start that really easily by going from your bank statement first of all. If you've got credit cards, go through them as well, and just make sure you dropped everything in. It's not really by bank account, it's by the business itself. So if you've got multiple banks, multiple statements, just pick up your regular subscriptions and your payments and things like that you're going in. If you've got anything currently outstanding, you can pop them in as well. And so it kind of gives you an idea. And you can then, you can play around with these figures. So if the overheads, you can say, well, I've got a bigger consultancy bill to pay in July, for instance, or my phone bill is going to go up slightly from, you can kind of play with these figures and see what the impact's going to be. And this is where you can then speculatively say, well, what would happen if I hired a new person from July? And so that salary increases. What would be the bottom line of this? And you can, like I said, you can drag this all the way across. You can have a 12-month one. You can even have it longer if you want. What we normally do is for a forecast or a budget, we normally recommend doing it 12 months at a time, and keeping an eye on it as you go throughout the year. The problem is if you make a 3 or 5 year forecast, things change so rapidly. Nothing. I mean, most of the time the budgets themselves go out of date, or you need to be making revisions throughout the year, whether that's quarterly or monthly, because otherwise they'll go out of date themselves. The original sales targets that you set might have been too low and you've smashed them and you're doing really well, but with that comes more spend. And so again, you've got that big decision and your budget doesn't reflect that. Or it might just be that, you've had your costs creep up on you and you haven't been keeping an eye on it. So this is a really good kind of sheet to come back to at all times and just refresh yourself with it, just double check the figures are good and that you're comfortable with where you're at. So let me go back to here. So some cash flow solutions. So some of the quick wins, I guess, in terms of your cash flow. So it's all about kind of facing the problem that you've got. So we've got a few different options here. We've got raising sales volume, raising your sales prices, reducing your costs, utilizing your time, and ad hoc stuff like tools, experts, and trackers. So raising your sales volume. So this is something where you're opening up that capacity again. So you might have a product that's, you think of some products that are kind of low value, but you can shift a lot of units. So maybe they're a pair of cheaper sunglasses, say £20 sunglasses or something like that. You can sell a lot of units of those. Even if it was £100 sunglasses, you can sell a lot of units of those. But you need to reach new customers constantly. You need to be reaching out to them. There's only so many pairs of sunglasses someone will need, and how many times that person will buy from you. So you need to ensure on a regular basis anyway. So you need to ensure that you're reaching as many people as possible, increasing your capacity. And with that comes challenges. Obviously, the main challenge is your systems and processes will be put under strain. They have to be, it will challenge the scalability of your business. There's only so many hours in the day. There's only so many things that you can be doing at once. And so you'll quickly find that if you are going for a volume approach where you want as much as possible and to reach as many people as possible, which is more common in the product industry, then you're going to need to make sure you've got fulfillment options and warehouses for storage and shipping and things like that. Make sure you've got the staff to look after the admin or the website or whatever it might be. That's just in a retail e-commerce kind of example. But you've got to make sure you've got those systems and processes in place so that when it comes to scaling, you've got everything all there so that it can kind of run on its own or with your assistance, but not with you actually down there in the trenches, as it were, making sure that everything's being, there's only so many packages you can post out yourself, for instance, before you then need to get someone to help you do that. So whether that's like a PA or an intern, or whether that's like using like a center or outsourced kind of service. And it kind of comes down to that fourth point of utilizing your time, which we're going to go into in a bit. Another option is raising your sales prices, because what you might be thinking about the volume is that'd be great. I'd love to reach more people. I'd love to have a fulfillment center or an office where I could have a couple more desks to hire people, but I don't have the money to do that. That's the problem. I need the cash flow to get the warehouse to be able to do that, to reach more people. So it does create this kind of chicken and egg scenario in a way. So one way is raising your sales prices. It's probably one of the hardest things that small businesses struggle with, I think, in terms of the, actually, whether it's the conversation that you're having with your customer, especially if you're in the service business, of why your prices are increasing or why you charge what you charge. But even in the products as well, I feel like a lot of people will compare what's in the market in terms of, oh, well, my product's similar to this, so I should be charging similar or in that kind of region. And it's all coming down to what your product does, what the value of your product is, what that proposition is there. So one thing is that you just got to remember that Prada sell a paperclip for £125 or $180. Tiffany & Co. sell an 18-karat gold paperclip for £1,100 or $1,500. And you can get a bag of paperclips for, 50p or whatever from Staples or wherever. And so it's the different quality, the different kind of experience that customer is going to go through, that value proposition. Obviously, that's an extreme example. There's not a lot of value I feel you can add for paper clips, but the idea there is that you can kind of charge what you want depending on what your customers are willing to pay you for it, as long as you are demonstrating value and you're giving them value for money. So you might be in an industry where a product of that type is generally £50. It's hard to think of, because if you think most products, there'll be a lot of different offers available in pretty much most industries. And you can get, for instance, some accountants that will do a tax return for £30 for the year. You'll get some accountants that will charge £100 a month for the tax return. It has variables depending on what's in it, and obviously who's doing it, the quality of it, the timeliness, the value, etc. And the same way you can buy some sunglasses for £10 from a supermarket, or you can buy Ray-Bans or Gucci or whatever it might be, and they'll be considerably more. So it all depends on that value proposition. And so you've got to just understand what your product is, what the quality of that product is, and how you're going to present that to the customer. It doesn't mean that your product's bad. It just might be that you're just not communicating it well enough with the client of what they're getting and why they should come to you and pay more for it than going elsewhere and getting a cheaper product. So you'll find it in pretty much every industry. There'll be a cheaper version of something. You can get knockoff iPhones and knockoff AirPods and things like that. They're cheaper. They're probably more unreliable. And so those things, that's where that value then starts to detract, which kind of leads me on to reducing costs, because this kind of cost-cutting exercise, it can sometimes have a detrimental effect on the business. So if you go through and start cutting all of your costs and being ruthless with it, what you start to find is that the services you had before that were saving you time, allowing you to work on the business and develop it and grow, are now no longer there. So you've got to go back and do that. And suddenly then your sales aren't getting the attention they deserved, or the process hasn't been streamlined enough. And so you're then struggling to kind of weigh up between, saving a bit of money, but then having your sales decrease or your actual operations be affected. So you've got to make sure that, like I said, you can use that spreadsheet on the list of overheads and things like that to look through and go, right, okay, am I getting good value? Is it something that's saving me time? Is it something that if I had to jump back in and do it, would it take me a lot of time to take care of? Then that's all stuff to consider. And it might be that, yes, you could save £100 a month, but it's going to cost you 3 hours of your time a month. And, if you work it out, your hourly time might be worth £60 an hour. And so you're actually losing money that you could have been spent having that outsourced, or having that piece of software look after the booking system for you, or whatever it might be, and you can then focus on what's important and what you're good at. And so it's all about playing to your strengths on that side of things. And so kind of leading on to that, we're utilizing the time. It is about that time equals money. You've kind of got to spend money to make money in a way, to actually grow and to push forward. You've got to sometimes take those leaps, take those kind of opportunities. And so that might be something as simple as just hiring a PA to free up your email or your admin or your filing side of things, so that you can then jump in and focus on the sales aspect, or maybe an area of the business that you feel needs your attention, but currently you don't have the time to offer it. So have a look at something that maybe you're currently doing in the business that could potentially be taught and outsourced to someone else, and have a look at what you'd like to be doing in the business. And if that's something you could do, maybe that's too expensive to get an expert in right now, but you could outsource the admin at a cheaper rate perhaps, and take care of this new area yourself. So it's all about leveraging what you have available, what resources you have available. We have some people that come to us and they've got everything outsourced as maximum as they can, and they're then freed up to either just focus on the sales or the systems and building the business. We have other people that come to us and they're trying to do everything themselves. They're just starting to outsource their accountancy function because they don't want to be spending time on that anymore. And so people are all at different stages and different ideas of what works for them and playing to their strengths. And so you just got to find what works for you. And lastly, tools, experts, and trackers. So like I said, I've shown you how to do kind of put together a quick cash flow statement budget on a Google spreadsheet. I'm sure you can get free templates, you can get paid templates probably that are all bells and whistles with the formulas already in there as well if you just hate spreadsheets. You can also talk to your accountant about it. A lot of accountants will be able to provide that as a service as well. And even using your tools and software. So if you're using something like Xero or QuickBooks, I know Xero has like a built-in budget manager within it where you can kind of track those, put budgets in against those costs and get a rough idea of what your cash flow is going to be like. But there's even more specialist tools like Fluidly and Float, which allow you to create 12-month forecasts for the price of a monthly subscription, which could be about, I think it's about $30 a month or something like that. So there's different options there. And you can also use some of the trackers, some of the apps that are coming more to business side of things, whether that's something like using your insights within your bank, whether that's Barclays or Metro Insights, or whether that's like Starling and looking at your spending categories and things like that. More and more bank apps are starting to offer that kind of analysis within your banking app. So you can see it right there. Oh, I spent X amount on telephone bills this month, or whatever it might be. So you can kind of then get an idea of what your breakdown is there, drill into them, and use it from there if you're not quite ready to kind of pull that all into a spreadsheet and look at it that way. So one of the things I want to kind of leave you with is just facing the problem head on. You can't bury your head in the sand of this. You just got to admit the issue, make the plan, and then tweak and adjust as you go. Like I said, the budget's not going to be 100% right day one. It's going to change as you go. It's okay that it's going to change. As you start to put things into motion, you might then find that your sales targets that you put before are too low now. You've got the capacity and you've built the system so that you're now bringing in sales more efficiently. So you're getting more money per item than you were before, for instance. And just some kind of stats to kind of leave you with here. It depends whether you want to survive or thrive. So 51.8% of UK small businesses were cash flow positive in April 2019. This was off of a study that Xero conducted across its like network of small businesses, essentially in the UK. So that's just over half of businesses in the UK actually had a positive cash flow position in April 19. So that's a staggering amount of people that were actually in the red, as it were, that were struggling with this. So you're not alone. It's not just something that happens to you. It happens across the UK, happens across the world. 37.7 average number of days for a UK small business to get paid in April 2019, based on a 30-day term. So most people, by default, if you're giving them 30-day terms, they're paying you 7 days late on average than what they should be paying you. A lot of the bigger companies are kind of like big Vodafone, and big corporates are kind of responsible for that when they're putting 90-day terms, or they're paying when they want to pay you, and stuff like that. So there's quick wins there in terms of if you're struggling getting your money in from your customers, just setting up invoice reminders or having some kind of credit control in place can really just bring that cash in and accelerate it in, so you can reinvest that in your business and build it from there. And only 50% of small businesses will make it to year 5. So in the UK currently, this is these are, I think the stat was from the end of 2017. So it's going to be similar. It hasn't changed massively. I think it might be a little bit lower or a little bit higher for 20. I don't know if they've even released the 2018 ones yet, but this is the most recent stat I could find. So 50% of small businesses survive to year 5. So that means that half of the businesses that are here today, that's set up today, for instance, won't be here in 5 years' time. Now, one stat that Xero did, which is of a benefit to them, obviously, but I'd like to think that they're being honest with their stats. 88% of businesses that work with an accountant and use Xero make it to year 5. So it's a huge increase. Obviously, there's still 12% there that even with an account, even with Xero, it just doesn't work. They don't make it, or maybe they want to close it or go a different direction, or maybe it's just not a good business model, perhaps. Maybe they haven't used Xero properly, or maybe their account's not that great. So there's still not 100% success anywhere, and there never will be. But the studies have shown that it's highly increased, and I'm sure this will be the same if using QuickBooks or even just working with a good accountant. That'll be able to just help keep you on track with your figures, and not being afraid to reach out to your accountant if you need help as well. So just some things to bear in mind there. So I want to leave you with 2 recommended reads that kind of cover cash and profit and how to get more money out of your business and how to reinvest it and grow it efficiently. I'd recommend both of these as audiobooks because they're both read by the author. I don't know about you, but I really like the audiobooks that are kind of read by the author rather than by some random narrator. They often add little tidbits and little bit extras that as they're going along the way and having that kind of conversation. So First one is Profit First by Mike Kalowitz. Sorry for the image quality on these. I pulled them off of Amazon last night, like the image downloads. These aren't affiliated or sponsored. They're just ones that I really enjoyed in terms of the content and what they were talking about. Profit First is all about forgetting about the accounting profit and looking about your cash profit, how to set aside money so that you've got money at the end of the year that can cover your taxes, can cover your bills, and can pay for that holiday that you might want or whatever it might be. Business with Punks. So James Watt is one of the founders of Brewdog, and he talks about how he's kind of grown Brewdog from what it was all those years ago to what it is today, being worldwide with restaurants and beer everywhere. So Business for Punks is a little bit more general business in terms of different areas, but it does really go into cash flow and profit and why you should just focus on the cash itself, why it is cash is king. So really good chapters in there as well. And like I said, the audiobooks are really good on those side of things if that's your thing. So lastly, what's next? So I'd recommend head over to the Cone Facebook group. So it's Cone Community, and you can go to that facebook.com/groups Cone Community. We're trying to get that back up and running again so that everyone's kind of involved in it. It can be a place where you can ask fellow entrepreneurs and business owners of potential struggles that you're having, and they might have gone through the same thing and be able to help. And so you might be able to then help someone else that you've experienced and stuff like that. So the idea is to create this community where everyone can kind of contribute and help each other out. If you found this useful, share your feedback, feelings on Instagram or Twitter using Cone Accounting and @Ben.Nacca. It'd be greatly appreciated. And maybe there's something you didn't want to ask publicly on the Q&A that we're going to do in a sec. Drop me an email at ben@wearecone.com with your question. I'd be more than happy to point you in the right direction. And lastly, we've got our Wellness for Success event on Wednesday, the 26th of June, this Wednesday at 6:30 p.m. in Winchester. If you go to our bio on Instagram or you search that on Eventbrite, grab your ticket. It's at Open House Deli in Winchester, and yeah, we've got a great panel of people talking about essentially how to hone in on your wellness and ensure that your mindset and your health is just top tier for when you're running a business, and how to prioritize that, how to fit that into your day, just tips and stuff like that from some experts in those fields. So yeah, I hope you had found this webinar useful. Obviously, any questions at all, now's the time to ask them. We haven't had any so far, so I'll leave it a couple of minutes. I'll leave it just for a sec, just to see if there's any questions. Just pop them below if so. No, it looks like there's none so far. So, like I said, if there's any questions afterwards, you can always drop me an email afterwards as well. I'll send out on the email, there'll be a recording of this, so you can watch this back, and that downloadable term sheet as well, so that you've got those there as well, so you can refresh your memory. But yeah, have a good rest of the day, rest of the week, and yeah, keep an eye on our webpage, wearecone.com/resources, for future events and webinars. We've got one in July as well about record keeping and just how to systemize that. And yeah, we'll speak soon. Have a great day.